And we've got Michael from Toronto. How you doing today, Michael?
I'm along the GDX,
Okay.
and just wondering where should I place my downside stop if this thing goes south?
Where are you in this thing?
19.
You know, when a stock goes sideways, we got, I'm going to call it 5 days here after the gap up. I love it when these things do another 5 days, but generally at the either high of a trading range or the low of a trading range. All you've got out here is a stock, or at least gold going sideways.
Mhm.
And that is problematic, as that you bounced off this low, came into this big candle that had 80, let's call it 85.5 million shares, and you've been kind of volume kind of coming out of it. Got about 15, 16 million so far today.
Mhm.
Generally, you get about 5 or 10 of these days together like this, and it's a signal of one of two things. Either you got somebody that is right below the bid buying it every time it comes down a little bit, or you got somebody selling it every time it goes a little higher. I haven't watched the tape on it. Have you? Have you been
Yeah,
watching the
yeah. I've
trades?
been watching it. I've been watching like leaders of the gold, like Royal Gold and Franklin, Nevada, and
Yeah, but
you see.
so
So
is your belief in this that people are selling it every time it goes a little higher, or buying it every time it goes a little lower?
I'm lost for words. All I know is that I deciding whether to protect the gain that I have, or basically, well, the break. My stop is break even. Okay, so
Yeah.
I'm just worried that once it breaks through my entry point, how low could it go? Could it go all the way back down into the October lows for a retest?
Well, as long as gold holds about $1,200, you should do okay. If it breaks $1,200 after this, it's probably going to $1,000. So, you've got kind of a nice setup here where, as long as it stays about $1,200, maybe you got something. It's very tough, and a lot of people, I think, read a little bit too much into it. But if this was a stock that was $12 and went from $12 to $12.30 to $12 and then $12 to 20 and 12 cents, most people wouldn't think it meant anything, right?
Mm-hmm.
So I'm just going to talk about gold and not the individual miners here, because basically
Okay.
the miners are going to follow the price of gold. So the only thing I can say here is, do you have an abiding belief that gold is going higher or gold is going lower?
I'm bullish on gold.
So you have an abiding belief it's going higher.
Yeah.
Okay. So at that point, you'd be right. You'd put in your stop. It could get down to 1864. But my guess is this going sideways like it does means that in another 4 or 5 days, it's either going to gap up a buck or down a buck. Because normally when these things go sideways like this, there either is a ton of people, and I haven't watched the trading intraday, but you can certainly do that the rest of the day. Watch it. Are people selling it as soon as it ticks up, or are people buying it as soon as it ticks down? And just sitting there watching, like you said, you were looking at a lot of these stocks. At this point, you've got to figure out which one is which. Can't see it from the daily charts. And really the best thing to do is, an age-old thing, which is called reading the tape. James Wyckoff and Jesse Livermore got together and wrote a book called Tape Reading, something or rather. I'll think of it in a second. But they used a name. Let me see if I can find it here. Called, and I know there isn't a lot of tape reading skills taught anymore. A lot of it's all technical. But there may be something you want to take a look at. He wrote the book. Okay, here it is. Studies in Tape Reading by Richard Wyckoff and Rollo Tape. it really was by Richard Wyckoff. I don't know why he put the pseudonym in there, but for like 40 years, it was supposedly written by Rollo Tate, and is one of the preeminent books on this. We don't talk a lot about it because, again, it's something that just takes so long to really get under your belt that it's hard to actually. It's more the equivalent of why a professional surfboard rider can ride a wave a lot better than somebody that hadn't been on the waves for a long time. It takes acquired knowledge, but the basics are in that book, and it's only like $10. There are a bunch of that, but it's called Studies in Tape Reading. But what you want to do is sit there and look at it, and over years, if you spend some time with it, you can see whether or not people are buying the dips or selling the pops. And that is the problem. When this thing goes, it's going to probably gap up. My guess, like I said, could gap up $1 or gap down $1. So
it's notorious for that at the open.
Yeah, and
look
that's
at the chart. Look at the daily chart. There are these nasty opening gaps and opening sell-offs, and then someone buys it or someone sells it, and they stay in this very, very tight range. So it's kind of like coiling. But the question becomes, is it coiling to the downside or the upside?
Yeah, I always called it Lazarus pattern, which it just looked like it was dead, right? And then it miraculously comes back to life. And that's kind of what this thing is doing right now. It's just going sideways. You don't have a lot of impedance. You're down a little bit on lighter volume. You could make the case either way, but I think I'd have to probably spend a few hours watching each one of these things trade and see whether or not people are buying or selling the pops or buying the dips. And as long as you're probably going to have a handful of,
it's just been going down.
What's that?
Heading south, right? I mean, the question is, did it basically capitulate in August there and rebound or
well, you would make the case, I think, primarily on this sign of strength on the 11th of October, when it went up on 135 million shares and came back and filled that gap with 55 million shares on the 31st. So in the very short term, that's what it would be.
So a cup and handle formation to the upside.
Huh?
A cup and handle formation to the upside?
I'm not big on cup and handles. I am on the sign of strength and gap higher to be pulled back and filled with lighter volume. And you did kind of have a heavy day out here on the 25th, but the next 4 days after it were kind of light, and then you gapped up higher and the volume did increase. I'm not a big fan of trading these patterns because to me it's more of a roll of the dice. And the only way I've ever found to adequately do this is literally go through there and open up charts and get the tick data and watch the trades and figure out which side everybody's on. So, yeah, 1864 would probably be your stop out.